Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good morning. Welcome to Financial Issues. We're so glad that you joined in today. We hope that we can be a real encouragement to you as you steward the resources that the Lord has trusted you to manage. We believe that God owns everything, and we want to help you defund darkness with a biblically responsible investment strategy and encourage you to fund the light. That is to be a joyful and generous giver. So we hope that you'll find out more about our ministry at financialissues.org. Let's start, though, with our stewardship verse of the day. It comes from Proverbs 22:1. A good name is to be chosen rather than great riches, and favor is better than silver or gold. Well, one version that I read says it like this: if you have to choose between a good reputation and great wealth, choose a good reputation. So now, who would really want to have to make that choice? A good reputation or great wealth? Well, you know, money is not something that we get to bring into eternity with us, but our good character is. So that may not make the choice much easier when you're confronted with having to choose between good reputation or great riches. But I hope that we are reminded of this scripture every time that we're presented with an opportunity to increase riches that would involve compromising our character. Seth, what did you see?
That's good, Shana. Yeah, I love that. You know, the value that money has is limited, as this verse shows us here, of course. And on the other hand, like you said, there's something far better, the value of a good name, high character, good reputation. We seek and find these things by living according to the Word of God. And so my hope and prayer for us is that that would be what drives us as we try to, manage our money well and figure out what's going on in the world, all that stuff. That we would live according to the Word of God, because that's what matters most. So, Shana, for today's topic, I thought it'd be good as we're coming to the end of the month, just looking at the state of the economy in the month of July. We're 1 month into the third quarter of 2024, and boy, there's a lot to digest from this past month, not just in the markets, of course, but in the political cycle as well. But just to start, Shana, what's your take on kind of where the economy is right now as we're on the second to last day of the month of July?
Well, I think there's a distinction that needs to be made, too, right off the bat between the economy and the markets. So the economy is a very broad measure. So we're looking at unemployment. We're looking at growth in the economy. We're looking at things like inflation. The markets are actually a leading indicator. The markets try to assess what's happening currently in the economy and be forward-looking and respond accordingly to whether they think the economy is moving in the right direction or the wrong direction. And the economy is very cyclical. So, there are definitely cracks that are emerging in the economy. Those three key measures, inflation, GDP, and unemployment, to get to those just a little bit, inflation is 3% right now, or 2.5%, depending on which measure that you're looking at. So, and that's if you think the government numbers accurately are reflecting inflation. So CPI, Consumer Price Index, is one measure that the government looks at, and it is running at 3% year over year. That means prices are increasing by 3% on a yearly pace. Now, this is compared to 3.2% a year ago. So it doesn't sound like much difference, but if you look at the 3-month averages, currently right now, if you average the last 3 months together, we're at 3.23%. If you go back a year ago and average those 3 months, the most recent 3 months together, we were running at 4%. So inflation is moderating, as we hear from all of the talking heads, all of the economists. PCE, though, is another measure of inflation, if you will allow me to confuse you just a little bit. It is the preferred measure of inflation that the Fed looks at. So while CPI is at 3%, PCE is at 2.5%. That's year over year. If we break it down on the 3-month averages again, right now we're at 2.6, whereas a year ago we were at 3.8. So, there are problems with both the CPI and the PCE measurements. They're really sort of academic more than a true gauge of how it's impacting our bottom lines as Americans. And PCE and CPI both fail to accurately reflect the real rate of inflation because they exclude some critical factors which impact our bottom lines. For example, changes to home prices, which we know are really out of control. Interest rates, the cost to purchase a home, have more than doubled over the last 3 years or so. Health insurance, home insurance, all of those costs have accelerated as well. So the CPI and PCE don't include the additional fees for shrinkflation. You know, we poke fun and, you know, because Joe Biden really railed against shrinkflation, but it is a real thing. It's, you know, it's something that corporate America has had to implement in order to maintain their margins and their profitability. From the government's perspective, there are also creative ways that businesses can increase their bottom line. Like one thing that I've personally noticed is how, you know, the price per item really hasn't jumped all that much. It's not all that shocking, but when you get your ticket or your checkout price, that total amount has really increased, and it's because businesses have found creative ways to get around just raising prices as much as they really need to on specific items. So, you know, you have when you get a burger now, you have all of these additions. You know, if you want cheese on it, that's going to cost you more. If you want avocados on it, it's going to cost you more. Whereas if you want bacon on it, that's going to cost you a lot more. And then also the prices, like for drinks. We went to eat after lunch, after church on Sunday, $12 for 4 drinks, non-alcoholic beverages, just that you go get out of a fountain yourself. So, you know, it's all of those kind of things.
They must have been really good drinks, Shana, I'd imagine.
I mean, how bad can you make tea? I don't know. But, you know, according to all measures that the government uses to report inflation, the breakneck pace of inflation has slowed, according to their numbers. But with current and predicted future spending, and that's what's going to be the driver of inflation going forward, there's no way that prices are going to go down, not on a large scale. GDP, which is how we measure growth in the economy. Right now, we're told that we're growing at 2.9% as of the first quarter, January 2024. You mentioned we're a month into the third quarter. We don't even have the total second quarter numbers out. So that seems pretty decent. But GDP is presented in real terms, which means that it's adjusted for inflation. So unemployment is the third metric there, trying to get through all of this before the end of the first segment, though. Unemployment is at 4.1%. The 3-month average, though, if we look at those numbers, has jumped from 3.5% a year ago to 4% today. If you saw that kind of jump in a shorter period of time, you would be really worried. But, you know, I would suggest to you that when this does happen, there's economic principles that tell us that once you have that half-point difference in a year, that the rate of unemployment starts to increase a whole lot more. So there's 1 million less job openings today than there were a year ago, and almost 1 million more people unemployed than a year ago. The labor force participation is something that we're looking at too. The number of employed and unemployed people that are looking for a job, that's what the labor force participation rate is, that are 16 years and older. In the United States right now sits at 62.6%. That's as of the end of June. So I guess that's pretty close to the long-term average of 62.8% from 1948 to 2024, but it's a far cry away from the all-time high that we saw in January of 2000. So just 24 years ago, participation rate was at over 67%. The employment to population ratio is sitting at 60.1%, meaning that only 60% of the population is working. If we're using an accurate number for population, if we're using Biden's number about how many illegals have crossed the southern border, or are we using a more realistic number for how many have crossed the southern border. So there are definitely cracks emerging in the economy. And if you ask the average American, they may not be able to articulate it, but they can sure tell you that they don't feel better off today than they were pre-COVID. So when people ask about the economy, though, most of the time they mean the market, what's happening in the market. So that's a whole nother ball of wax, and maybe we can look at that when we come back. So we've got to take a break right now. Hey, our phone lines are open if you're listening live. The phone number is 610-363-1110. You'll be the first caller in the queue, so if you have some questions, get your call queued up now.
My name is Valtasia. I have 5 kids total. I was basically a single mom. I didn't have an address to my name, and here it comes, that not just one baby I'm finna have, it was 3. I honestly was not gonna keep them. I had it in my mind deep down inside that I couldn't do it. I came straight abortion minded. What changed my mind was I talked to the counselor, and, very encouraging. They'll also tell me, you're not going to be alone. If you need anything, reach out to us or anything. I was amazed. I definitely have a challenge of having my babies. A lot of people will ask me, how do you do that? How do you maintain? Only thing I could say is prayer. Prayer really, really worked.
To donate, just dial pound 250 and say the keyword baby, or go to financialissues.org and click on the preborn banner.
How is Timothy Plan continuing to lead the fight as you guys now enter your 4th decade of leading this fight of biblically responsible investing?
We've been too silent for too long, and we can no longer be silent. You stand up, like Ronald Reagan said, we're only one generation away from losing all of our liberty. Yeah. It has to be fought for. I wish it didn't. And you can fight for it. You don't need guns and ammunition and that. You can fight for it, especially with your dollars, because it's always about the money. And when the money starts impacting people, they start paying attention. When we launched this, they said it couldn't be done, but here we are 30 years later. They said you couldn't get competitive returns, but here we are.
What a tremendous testament of God's grace.
Go to financialissues.org/Timothy Plans to learn more about Timothy Plan.
Welcome back to Financial Issues, everybody. Live this morning. Good to be here with you all today. Shana, we were just talking, you were getting to the difference between the economy and the markets. That's helpful for me to understand because I think, somewhat erroneously use those terms interchangeably. Give us just some of the difference there between the markets and the economy here.
Well, you can think of the economy kind of as the, if you're making a comparison between the Titanic and a little speedboat, the economy is going to be the Titanic. You know what I mean? It takes a little bit of time to get fully up to speed, and then it, gets cruising along. And then, when it needs to stop, it needs some time to wind down. It can't really take corners on a dime. Whereas a speedboat, it can go really fast in one direction. It can go really fast in the other direction, and it can turn on a dime. So, the speedboat is the market, and the Titanic, or a big oil tanker ship, that's a better analogy, I guess. We don't want to think about
because it's not in the bottom of the ocean right now.
Right. And, our economy does run on fossil fuels.
Yeah, that's true. That's good.
So you can kind of think of those as the difference there.
Yeah. No, that's really helpful. So, Shana, just kind of to pick up from what we were talking about in that last segment there, what else do we need to keep an eye on as we're coming to the end of this first month of the 3rd quarter?
Yeah, well, so the thing that a lot of people keep an eye on quite frequently is the market. So I guess we'll talk a little bit about what's going on there. Yeah. The market is shifting from a scenario where the Magnificent Seven, if you've probably heard that terminology if you listen to financial news at all, but, where the Magnificent Seven were primarily driving the major gains. And we're hearing that there's a broadening out right now. So it means that people are interested in more than just the Magnificent Seven. So we've seen a little pullback in the markets last week. And the good news, though, is that money is not coming out of the markets totally and just going to sit on the sidelines, but it's rotating. And we're hearing that terminology too. It's rotating. They're taking some gains out of the Magnificent Seven, and they're rotating those gains to small caps and, value type stocks that have really sort of underperformed when the Magnificent Seven was getting all the attention. So if you look at an equal weighted version of the S&P 500, so that is a version of the S&P that gives each of the 500 or so members of the S&P equal influence. That equal weighted model beat the U.S. equity benchmark, which is the price weighted, for the third straight week. So that's kind of what we're talking about when we say that there's a broadening out, because the price weighted index is really driven by the largest companies.
Yeah. And Shannon, I think we've been maybe tempted to hear some of this. I'd love to hear your thoughts on it. But could we be moving towards a potential for brighter days in the next couple months? We got an election coming up. There's talk that there could be a potential interest rate cut. What are your thoughts on that?
Well, yes, I think interest rate cuts are on the horizon. I mean, if the Fed was smart, they'd probably get started with a small one this month or this week when they meet, but they probably won't. They're probably going to be they're probably going to wait a little bit too long and then have to do bigger cuts. That's just going to be a little bit more disruptive. I think the polling is still showing that we're expecting a second Trump presidency. I think that will be good for the economy. I think it will be better for the economy than if we have 4 more years of what we've had and what we had under the Biden administration.
Yeah.
But what we have to remember is that one election cannot fix this country. I don't hear either side talking about the real problem, which is spending, and one man cannot fix this country. Better interest rates alone can't fix this country either. So, we have to focus on the things that we really have influence over. We can cast our vote, but do we have absolute influence over the outcome of the election? No, there's still a lot of wild cards there. I think there's still a lot of potential for a lot of dishonesty and cheating. So, our government may or may not end up reflecting the majority of Americans, but it's not monetary policy or fiscal policy that we even have a lot of influence on. My phone has not been ringing by Jay Powell to ask me what I think about interest rates. I would suspect that yours hasn't either. They're going to do what they're going to do. Congress isn't really listening to their constituents because the constituents are saying, pump the brakes on all this spending, and they're just not doing it. So, until we can really right the ship and get fiscal spending under control, we're moving very quickly toward the edge of a fiscal cliff. But what we can control, let me just, now that I've puffed up your anxiety about all of that stuff, let me just tell you what you can control. You can control how you deploy the resources that you're in charge of.
Yeah, it's a good reminder, Shana. So how do we make sense of everything that's happened this month from an economic standpoint?
Well, I mean, with moderating inflation, as confirmed by the PCE number that we got out at the end of last week, and increasing unemployment, the hand of the Fed is really being forced to begin cuts, and I think they're wanting to do that. I think they're ready to go along with that. And rate cuts are good for highly leveraged companies like small caps, which have been really struggling, utilities as well. That have really been struggling in the high interest rate environment.
And then, Shana, with what's going on here, just some insight for our partners on the current state of our strategy. Obviously, there's a lot happening. Is it remaining the same as it has been the last several months, or are there any changes being made to it? What can you tell our partners about that?
I mean, our strategy, our long-term focus, our buying quality, being biblically responsible, those things certainly have not changed. I mean, we make the best decisions that we can. There are small micro changes that happen all the time. I mean, you see the turnover in the buy list. You see some sell alerts coming out. So what we do is we focus on the decisions that we can, the things that we can control, and we make the best decisions that we can with the information that's available to us. We honor God by avoiding companies that would deploy our money, the money that we're managing for God, to fund the darkness that's happening in our society. And we don't make huge changes to try to time the market.
Good stuff. Last question for me here, Shana, is how do we continue to protect what we have and rightly steward the money God has given us, knowing everything that you just said in the last segment and a half? How do we do that, knowing what's going on right now?
We get asked that question a lot. How do I protect what I have? How do I preserve? How do I protect what I have? And I think we really have to avoid this protectionist kind of hoarder mentality that is just based in fear. I believe good stewardship consists of employing and deploying our resources wisely and confidently. So employing our resources means that we generate income, either, for the present, we use our skills and talents and abilities to earn an income, or we use our resources, we invest those to earn an income, or we put them back to try to grow them so that we can generate income in the future. Deploying our resources, that means giving. That means the traditional thing that we think of when we think of stewardship. So sending forth the money that we're called to send forth, that is going to fund the kingdom, and that's going to generate real gain and true riches, which are souls. So we want to be funnels. We don't want to be buckets. And, you will have worldly worries if you choose to live in the world's economy, but we choose to live in God's economy. So, we want to encourage you to view money as God does rather than as the world does. So let's shift focus a little bit to see where the markets are. On Monday, the markets were somewhat muted as we awaited this big week of earnings that we're now in, including the 4 of the Magnificent 7 that report this week. By the closing bell yesterday, the Dow was slightly in negative territory, and the S&P and NASDAQ were slightly in positive territory. This morning, the Dow has been pretty flat, just dipping slightly into negative territory. The S&P and the NASDAQ are in positive territory. So the markets have been pushing higher and higher with little pullbacks along the way. Buy low, sell high, they say. That is the way that you make money. But let me lay out a case here for not trying to time the market. So just looking at this year, from January 1st through July the 16th, the S&P 500 was up 20%. I think we've got a little chart to show up on the screen there. But then from June 16th through the 24th, we've got another little chart to show up there, one that's not green, it's red. We saw over a 4% decline in the S&P 500. So how do you think individual investors are acting? Are they buying low and selling high? Were they selling when the market was going up? Are they buying in that pullback? Well, not exactly. Individual investors have been piling money in as the market has made its way up. Greed has taken hold and given investors a bad case of FOMO, fear of missing out. The Investment Company Institute reported that a surge of buying mutual funds and ETFs happened in the weeks leading up to July 17th, for which is the week that we have the most recent data. So on the first chart that we looked at, if we can flip back to that green chart, that date, July 17th, was the peak of the market. What's even worse is that investors have been investing money that they've borrowed and that they're paying interest on. That's called margin. So a lot of times people don't have enough of their own money to invest. They see the markets going up and they think, man, I've really got to cash in on this. So they go and borrow money. So margin debt has risen 15% this year through the end of June. And historical stats tell us that most market timers are wrong. most of the time, just like in the most recent case that we've seen. Margin debt at the end of June, when the S&P 500 was around 5,500, was 27% higher than it was when the market was low, the opposite of what we're supposed to be doing. So in the last 30 years, to the end of the last year, the S&P 500 has produced total returns of 1,700%. The average investor, how do you think they did? They only made 900. 900 is still good, but it's not 1,700. The reason, bottom line, they just couldn't time the market accurately. They sold when stocks were down and bought them when they were up. So what we need to do is forget about which direction the market is moving. Just be diligent, consistent, wise investors, and most importantly, honor God by not investing in companies that are funding the darkness. If you've got to go, if you're listening to a station that only carries the short version, we have to bid you a farewell. For the rest of you, stick around. We'll be back with more financial issues. Through the ministry of Preborn, the Financial Issues family has saved tens of thousands of lives of babies. What an amazing job that God has done through you, the Financial Issues family. Would you join us in saving the lives of babies? What an amazing reunion we will have in glory, meeting all the people that we have saved. Please go to preborn.org, that is preborn.org, or financialissues.org, and click on the Preborn banner.
Every time I turn on the news, I get so frustrated. When I read a headline, it's obvious they're just trying to manipulate me for clicks and views. I just want to stay informed about what's going on without all the drama and opinions. I knew I needed to find an alternative, and thankfully I found FISM News. They keep the viewers up to date with all the latest news without the extra noise. Check them out by going to fismnews.tv. That's fismnews.tv.
Fear and uncertainty can cause us to hold things tightly and rely on ourselves. But during uncertain times, as believers in Christ, we are called to surrender fully to our sovereign God. The call to surrender to Jesus is one step in our growth in holiness. And it doesn't just mean you give over a few things. It means He gets it all, including our finances, our investments. Learn a biblically responsible investment strategy proven over 25 years. Keep the money God has entrusted to you out of companies that participate in things that God detests. Fully surrender. Become a Financial Issues Partners today. Learn more by going to financialissues.org/join. That's financialissues.org/join.
Initially, when we became members, I thought, what if this doesn't work? I mean, we were going to give up this whole concept of insurance, and we're going to trust God and His people. And I was like, yeah, well, of course. I'm going to trust an insurance company to come through for me, or I'm going to trust the church to come through for me. And that's a no-brainer. I love getting the monthly share that I give to each month that has the name of a real person and their real medical concerns and a prayer request, for them. If I have a need, I know I can go get care. I can see the providers I want to see. I don't have to worry if they're in my network. And if we need medical care, Samaritan is there.
A community of Christians paying one another's medical bills. For more information, go to financialissues.org and click the Samaritan Ministries banner.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to Financial Issues. We're so glad that you stuck with us today. We have a special treat for you.
Oh, yeah.
We usually play the Ag Report in the third segment here, so you can hear what's happening in the ag markets and the commodities market. But we've got Craig Haugaard live here today. Craig, welcome. Thanks for being with us.
Thank you so much, Shana. It's such an absolute pleasure to be with you this morning.
It is a very exciting thing for me to get to hear your live voice this morning. So, Craig, you know, the Financial Issues family has been praying for you. You know, we know that you've had some health challenges recently, but can you give us an update on you, your healing, and how you're progressing?
Yeah, it's been a tough couple months, but we'd had some bacterial infection issues that led to a couple surgeries, and you know, as a result of that, my bladder just kind of shut off. But it really seems like it's starting to wake up. So it's a real answer to prayer. And I know a lot of listeners have been praying, and staff there have been praying for me. And Laura and I just appreciate that so much. And it really, I really feel like we're turning the corner, and things are coming around pretty nicely.
Well, praise the Lord. We love you and
Amen.
Laura. Well, I guess we should talk a little bit about ag and the commodities. You got any updates for us on those bird flu cases?
You know, there was an update that came out last Friday, an update from the CDC. There was 3 poultry workers in Colorado that there was a large commercial egg operation there that had gotten bird flu in the flock, and they were in basically euthanizing birds, and as part of that exposure, they caught it. So that took us up to, I think, 13 people this year that have contacted the bird flu, but it's been pretty minimal. There's really not been any serious health concerns or health issues that have come out of that. Total for the year, we've had about a little over 18 million birds that have had to be destroyed, mainly chickens, a few turkeys in there, but predominantly chickens. And then I think there's 176 dairy herds that have been impacted as well. And with birds, with poultry, they eliminate or euthanize the birds. With dairy, they kind of work with it and try and bring that cow along. They lose maybe about 2% of the infected cows have died. The rest have recovered and been returned to the milking herd.
You know, I'm having deja vu. Didn't we have a bad outbreak? I don't even remember how long ago it was. How often does this happen? Is this a pretty common thing?
You know, the bird flu really is, and it tends to flare up. And in fact, I'm a little surprised we're still seeing cases. I guess it tends to flare up during the migratory bird season. So in the spring and fall, when you have, you know, in the big pathways, the flights of geese and ducks and whatnot coming through tend to bring that with. And so that's when you tend to see an upsurge in the numbers. Every year you have it to one degree or another. Some years are just worse than others. In the last couple of years, have probably been a little worse than we'd seen in a while.
Well, you know, this presidential election is something that's on everybody's mind. So could you speak just for a moment on how you expect the ag markets to respond to the coming presidential election?
Well, you know, if President Trump is elected once again, that's kind of a known. I would look for less regulation from that administration. I think we'll see increased energy production, which is very good for agriculture. That would tend to bring lower costs for planting, harvesting, and marketing that crop. And it's also probably going to reduce fertilizer costs because there's a lot of petroleum-based fertilizer out there as well. I think he would probably challenge China again, and the last time that led to tariffs that fell pretty heavily on the agricultural market, especially soybeans. So I think there would be kind of a mixed blessing from an agricultural perspective. But in general, I think most of the farmers that I have done business with over the years realize that we need to deal with the Chinese situation, and they're willing to kind of bear some of that burden to get there. So I think that's what we could expect for Trump. I think more energy freedom and a harder line on China. Now, you get to Harris, and she was the most liberal senator in the Senate when she served there. She had said that she would like to shut down fracking, which would obviously lead to increased costs. She's a huge proponent of the green movement, so I would expect that agriculture would be in her sights. We recently saw Denmark impose a flatulence tax on cattle. And I would expect her to kind of push a similar policy in the U.S. I think she would be very, very unfriendly to agriculture, certainly agriculture as it is currently practiced.
Yeah. A few weeks ago, you sent us an article about the apparent attack on the farming industry, and I think that's something that we would have to seriously be anticipating if we saw a Harris presidency, and, where it sort of makes farmers public enemy number one, right?
Well, it really is. The problem with fear-mongering politicians and kind of the academic elites is that you can't use natural forces to drive climate hysteria or an anti-fossil fuel agenda, right? I mean, it does them no good to get up and rail against volcanoes putting ash in the air. And so they go after targets like fossil fuels in modern agriculture. You kind of alluded to that, the article I sent you. The author of that is a young lady by the name of Jojo Mehta. She's an Oxford University graduate, lives in the UK, and started the organization Stop Ecocide Now. She recently spoke at the World Economic Forum in Davos, and one of the statements she made was farming is a quote-unquote serious crime equal to genocide. And then after she spoke, the World Economic Forum came out with a statement that the world faces a new crisis, that 1/3 of human-generated greenhouse gas emissions come from food production. So clearly with that statement, they have put agriculture firmly in the crosshairs. And obviously a Harris administration will be very much aligned with the World Economic Forum. And I would think we would see some, longer term devastating, leading to world famine impacts. But it'd be a bleak day for agriculture.
Yeah, I think, let's see how long we can exist not eating. Let's see, versus the world destroying itself over climate change.
Yeah, it's interesting when they talk about wanting to change traditional agriculture, and of course they're very opposed to cattle because of the methane production and that type of thing. But their solution, and you would probably find this attractive, I'm not sure, but there's a lot of recipes that UN is now offering for processing edible insects into tasty, nutritious products. So,
people eating bugs because they won't eat bacon.
Yeah,
Eat the bugs.
I'm not sure if I have to choose between grasshoppers and a ribeye. I'm probably leaning towards the ribeye, to be honest with you. But that is going to be the push. Then they talk about mealworms, for example, having earthy flavor similar to mushrooms, and would make an excellent addition to brownies. I assume those are marijuana brownies, probably. It'd have to be if I'm going to eat a mealworm, but
to make you hungry enough to want to eat them.
Yeah, the world is gone crazy, and we're being swept along, I guess. But
Absolutely.
At the end of the day, though, God is still in control, and man can do whatever he wants, but God will be victorious.
Amen.
Well
but
said,
I think
brother.
I'd rather the ribeye than the beetles or whatever they're trying to feed us.
Yeah, I don't think God's serving mealworms in heaven, but we'll see.
Yeah. Well, I guess we wouldn't need the GLP-1s anymore because everybody would get really skinny.
Yeah. There we go. Yeah.
Well, now that we've solved all the world's problems, is there anything else that we know that we should be aware of today from the agricultural sector?
Just for the crop farmers out there, obviously we're entering a real crucial time period for soybean production. We're starting to set pods. I believe like 40% of the crop is now setting pods. And as those pods fill out, if there's less stress on the crop, in other words, cooler temperatures and decent moisture, that's where you really get the big yields. And so the trade is going to be really watching weather very, very closely the next couple of weeks. Right now, we've got soybeans trading like 17 cents lower today. So the trade is obviously thinking that we're on the verge of a monster crop here. I would just urge listeners that haven't marketed beans or corn yet to maybe take a hard look at that. I think we're going to be into a very low price environment here for the next year or two at a minimum. And yeah, it looks like a big crop is coming, and exports are not real good right now. So I think having a very aggressive marketing plan and trying to capture what the market will give you is going to pay off. People who have been sitting on their hands are really going to be penalized for it here.
Great advice. Yeah, and you're often right about that. We hope that the listeners are listening. The farmers are listening to you. Thanks for being with us, Craig, today. It was so great to hear your voice and hear about how the Lord is healing you. Well, folks, stick around.
Thank you.
Stick around. We've got to take a break, but we're going to be back with more financial issues right after this break.
Today, it's easy to get caught up in the rush and forget about what really matters. But when it comes to your money, are you making decisions that truly reflect your values? Too often, we invest in stocks without knowing what they stand for. What if your money could speak for what you believe in? Imagine following an investment strategy that recommends companies that don't support the things that break the heart of the Lord. A steadfast strategy, never wavering from biblical truth. When your investments align with your values, your money speaks for you. Let your money do the talking. Invest in what matters to you. Because biblical values matter, even when investing. Visit financialissues.org to learn more. That's financialissues.org.
Navigating through investment options can be challenging, especially when you're determined to uphold your God-given values. Every dollar you invest is a vote for the world that you want to live in. Let your values guide your investment decisions and help to shape the culture in which we live. Become a beacon of light and pave the way with biblically responsible investing. Timothy Plan, where faith and finance collide. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Welcome back to Financial Issues. You know, laughter is good medicine, they say. And we had a good little chuckle there in the break. We have some comments.
Yeah.
And, you know, it kind of makes me wonder if the Lord gets a little chuckle as he looks down and watches the things that we fret about and the things that we do to try to, the problems that we seem to create on our own and the ways that we come up with to solve them. But Seth, you want to share some of the conversation?
Claude from Louisiana, comment of the day today, possibly. When we were talking about the cow flatulence tax with Craig there, Shana, he was saying, I hope that gas tax isn't extended to old people. I would agree with you, Claude. I mentioned in the chat, I don't think I have to avoid certain foods like bean burritos, eggs. Got to stay away from that stuff.
Well, I guess they've already figured out maybe bugs don't cause as much gas as
true.
Real food that
absolutely
God gave us.
Yeah. Just ridiculous. Just ridiculous.
It is crazy.
Yeah.
All right. I guess we got to get serious again. But we wanted to share our chuckles with you.
Yeah.
Let's get to the phones. I think Minda has a serious question for us. Hi, Minda. You're on Financial Issues.
How are you?
Doing well. How about you?
I am good, Shana and Seth.
Hey, Minda. Great to talk to you.
Seth. Thank you so much.
Yeah, you're welcome.
Shana, I loved what you said about timing the market because I never, except when your emails come into my email, I never look at the market. I don't even have a clue what it's doing until I read your email. And so you made me feel a little better about that.
Good job.
So my question is, I know this is not on the buy list, So maybe you could answer it from a general standpoint versus, I'll tell you the specific. Can I name the fund since it's not on any of your list?
Yeah, that's fine.
Okay, it's NXP. It's a tax-free income, Nuveen Select Tax-Free Income. I think it's a muni bond that's tax-exempt, has a 4.3% yield. But just in general, you can tell me what you think about those types of things.
Okay, let me just start with the basics for those listening that might not understand what that is. So a tax-free bond is going to be a debt instrument. So when states or municipalities, things like hospitals, universities, water treatment plants, things like that, when they want to borrow money, when a municipality borrows money, they do it in the form of bonds a lot of times. So they sell bonds to the public. And because it's for some type of public improvement kind of project, usually they get preferential tax treatment. So the interest that you earn on tax-free bonds are not federally taxable. So I guess your question is, do they fit in the portfolio? Is that kind of what you're asking, or?
Yes, it is a fixed income fund, and it pays 4.3%. So, yeah. I need some fixed income, so maybe I should just look at our buy list instead of. It is recommended by WISE, which is they're not, necessarily BRI, but they usually have some things that are decent. But I generally follow FISM, but my husband gets this particular newsletter, so I needed some. Not income, but fixed type things.
Right. So one of the things that you have to look at when you're looking at municipal bonds is what tax bracket you're in. Unless you're in a pretty high tax bracket, the taxable equivalent yield for municipal bonds is not really going to give you much of an edge. So the theory with municipal bonds or tax-free bonds is that, if you're paying, 30% in taxes and you have to pay taxes on your interest, that you can get a lower rate and still make the same yield after you account for taxes. Now, if you're in a lower tax bracket, that's not the case. You have to look at the spread. So if you can earn 4.3% tax-free versus 5% taxable, if you're in the 12% tax bracket all day long, it's going to be better for you just to buy the higher yielding fixed income investment and pay the taxes on it. In addition to that, if you're looking at what type of account you're buying it in. If you're buying it in a tax-deferred account or a tax-free account like a Roth or an IRA, that tax advantage for the municipal bonds just goes out the window. So, you also have to be really careful within certain states. I mean, I think you had also sent this question in and you mentioned, a lot of states have balanced budgets and things like that, but a lot of states aren't following their own rules. They don't have balanced budgets. So, when you have a fund like that, anytime you have a fund, whether it's a mutual fund or an ETF, you're really relying on professionals to pick and choose the individual things that are going to be made up, that are going to make up that fund for you. So you have to have a lot of trust that they're doing their due diligence there. If you're picking your own individual ones, then, it's really up to you to look at the issuer to see if they are running a balanced budget. Are they responsible? One of the trends over the last decade, or probably even more now, and I think one of the reasons that this ministry has really kind of shied away from municipals is that a lot of municipalities are no longer issuing debt to fund projects. They're issuing debt now to refinance their old debt. So, I needless to say, I prefer the things that we have on our fixed income buy list, and I think there's still sort of a rate advantage unless of course, it's a non-qualified account and you're in a really high tax bracket. And to the BRI nature of the question, so when you're buying bonds, you're actually the lender to the institution. You're letting them borrow your money. They're paying you interest. At some point later in time, they're going to give the money back rather than the owner. So, as far as the BRI question goes, most of them are probably pretty neutral.
Okay. I think I'll just go back to our buy list, and because I know that you have vetted those investments very well. So I think I'll just go right back to the FSM buy list.
Thanks, Minda. You always call in with some really great questions. We're so grateful for you because, you're brave enough to ask the questions that maybe everybody else has, but they're not asking.
Yeah.
Well, thank you. You always give good education on our questions. So I appreciate it very much.
We appreciate you too, Minda.
Thank you.
Thanks,
Y'all
Minda.
have a wonderful day. All right.
You too.
Bye-bye.
You too.
God bless you.
All right, let's continue in this vein and try to knock out some more
Sounds good.
questions.
Let's do it, Shana. First one here, Kay, age 70. Kay is trying to lower my credit card debt and have had an email offer of credit cards that give me balance transfer with no interest for about 15 to 18 months, but they are with some credit card companies that I remember being rather bad to support. So the question is, do you have any credit cards you can recommend with interest-free for a while? I use a credit union and have the credit on my Fidelity credit card where my stock account is also. Any advice for Kay there, Shana?
Yeah, I don't really have, we use credit cards for operational things, but I typically tend not to carry balances on the credit card, so I'm not familiar with any of the offers. What I would tell you, though, is that you have to make sure that you count the total cost because, although they may be offering you zero interest for 15 to 18 months, they will charge a balance transfer fee. So, that balance transfer fee may be 3% or even 5%. So depending on how long even if you get the money, the balance paid down in that 15 to 18 months, which would be a really good goal to have, there is still a cost to it. Otherwise, credit cards companies wouldn't be in existence. So, in this case, I see that, you're worried about doing business with Discover or Wells Fargo, which, Wells Fargo has had a set of its own issues with, consumer protection and doing some things that weren't exactly friendly to the consumer. I would probably opt to go back to the credit union and see if the credit union offers a credit card. The fees might be lower. They might be more straightforward, and just make sure that you're comparing them on an apples to apples basis. And as far as the BRI question goes about whether the issuers are biblically responsible or not, I would say that this is a case of neutrality too, just like in what we were talking about with the municipal bonds. In this case, you are the borrower, still not the owner of the company. So, sort of a BRI neutral. I would just look for the best terms and look at the overall cost. Is there a transfer fee? Versus, if there's a high transfer fee, but maybe your credit union has a really low, a really low offer, that might be a better thing because, even if they're sort of the same rate, you're paying the balance transfer fee on the whole balance. If you pay it as you go, hopefully you're paying that interest over on a declining balance. I hear the music. That means we got to go today. But folks, we hope that you will tune in tomorrow and the rest of the week because, Lord willing, we're going to be here to remind you that God owns it all. The Master is coming back, and there's going to be a question of how we handle the time, talent, and treasure we were trusted to manage. Our goal is to give you good advice and help you be found a good and faithful steward when you give your account to the Master. Well, folks, find out more about our ministry, how you can partner with the ministry at financialissues.org.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.